Welcome back to the Economics of Real Estate. I'm Dylan Silbernagel. I'm joined today with my co-host Matthew Gizzie. This is the show where we break down the real estate market, what's been happening, where you can find opportunities, offering you insights, as well as breaking down some of the policy decisions that is going on between our government, governments around the world that are impacting our real estate market. Matt, buddy, how you doing? You've been under the weather a little while.
Yeah, I've been under the weather for the week. It's been a good 4 days of somewhat suffering, but starting to come around today. So hopefully we'll be good for the weekend.
Oh, that's good to hear. That's good to hear, buddy. So we're jumping in and we're going to start taking a look at what happened in the month of March in the Toronto real estate market. And I think what I'd like people to know about, specifically when we're talking about sellers, it now is really the time we're in that market where it's becoming clear you either have to decide to make the market or to chase the market, right? Like it's not necessarily getting better. We're not seeing that boom of a spring market that we traditionally see this time of year. We're seeing some soft numbers. We're talking to our colleagues, like we're going to look at the data, but we've also been talking to our colleagues that are carrying a lot of listings, not seeing showings, not seeing things move. And what happens in that situation is if your neighbor that's up for sale as well is a little bit more in need of selling and they take an offer price that's lower than what you would expect, they've made the new market and now you have to adjust to it. So ultimately, if you can be the one that's in control, that's a little bit more open to working with the buyers that are in the market, because there's not as many of them as there usually is, you can negotiate a little bit stronger, but still be willing to set the market, as opposed to having to react as we see people slide down the market a little bit on the selling side. I'm going to talk about what that means for buyers, because there's huge opportunity out there. But Matt, does that sound kind of like what you're seeing as well in the market, both in the data and in your own business?
Yeah, absolutely. I think that the confidence in the market on the buy side is just not there right now, and we don't know when it's going to come back. We don't know if we're going to be like a 2020 situation where it's later in the year that we start to see a rebound. It's very possible, but if you have to sell right now just because of what's going on south of the border, what's going on with the federal election, there's a lot of uncertainty in the market right now, and I think Dylan hit the nail with the hammer is that you've got to be setting the price, and you need to be making the market and not trying to follow it on the way down, because you're going to leave potentially a lot of money on the table.
Yeah, absolutely. So let's talk about what we are going to cover today, because we've got a lot packed in here for you. So we are going to be looking at the Toronto Regional Real Estate Board overall. We're going to be looking at, of course, our GTA Freehold versus condos. We're going to take a look at Peel and Waterloo. Matt, I know you've got a particular interest there. Checking out, of course, the rental report. This is important for our investors out there, making sure we're mindful of that. But it's also important to Canadians. We've got a lot of Canadians where housing affordability has been out of reach. So knowing what's going on in the rental market is just the reality of it these days. Talking about consumer confidence, this is one of the big factors that is driving our market right now more than anything. Our York Freehold and Condo, as well as talking about Simcoe, as we've seen a lot of value there. So Matt, talk to me here about our interest rates, specifically our Bank of Canada rate.
Yeah, so we came down to 2.75 as we had a cut. I believe it was in March.
Yep.
Now, when they were talking about the cut, I don't think it was going to happen, but because of the impacts on the tariffs and what could potentially come in April with tariffs, the Bank of Canada decided to make the cut anyways. So they did cut to 2.75. So it'll be interesting to see in the coming months if they continue to cut. It is possible that tariffs can be inflationary. They can also be deflationary, but we'll kind of see how that trickles in the coming months.
Yeah. Okay. And so moving over to actually, I want to talk about this just for a second. When we trace this back to other times we've been hovering around this price, or sorry, this interest rate, you can see that coming into, now we were on the way up in 2005 in terms of those rates going up, but so was our housing market at that time. And it wasn't, coming in a little bit of 07 before the financial crisis, our market was going pretty quick, but nothing like we saw in the years down here when our interest rates were as low as they were. And again, if you look at the chart, like these stretches were just such huge times for the housing market, and we're just not there yet. right, in terms of
We're
where
not there yet, but I also hope that we get into a better range, maybe somewhere where we were between 2018 and 2019, and not go down to the lower bound, because it's those lower bounds that create a lot of speculation in the market, and they drive housing prices to, you know, unrealistic valuations.
Yeah, and I mean, even through these days where it was ranging from that 2 to 3% in there, this was stable growth. Like if you go back to these years in the Toronto housing market, it was a good time. You know, we were coming out of the 90s. Everything was kind of moving around in a better state there. So it's the issue right now isn't so much that we're at 2.75. It's more about the uncertainty that we're seeing. I know that the Bank of Canada wants to continue to bring this down to help our economy, but at the end of the day, if everything was cruising smoothly and we were status quo, this wouldn't be the worst position for us to be at. So I think we need to move away from that rate mindset so much now, and it's more about the uncertainty that's in the market.
Yeah.
All right, talking about bond yields, we updated this just before we started because we've seen some changes. So jump into it for me, Matt.
Yeah. 2019. So that's a good sign that the fixed rates are starting to break down a little bit further than the variable rates. They typically are a guide, so we should expect variable rates to come down this low as well. So for some buyers, it might be a great time to start talking to your mortgage brokers and ask, is fixed actually the potential better option right now? Because if we do get prolonged tariff activity, it could potentially be inflationary. So you could see the Bank of Canada not cutting the variable rates and potentially having to raise them if things get a little inflationary with the prices increasing. So it might actually be a better option to lock in, but that's a question for your mortgage broker.
Yeah, I think it is a valid part of the discussion. When you think about what fixed rates offer for Canadians and just homeowners in general, they tend to go that way because we're a little bit more risk averse, right? We like knowing what our payments are going to be for the next 5 years. And in a time of uncertainty, I would gravitate that way myself. And the numbers are actually making sense to an extent in comparison. So it's definitely worth that conversation with your mortgage professional. Absolutely. Now here's taking a look at Wawa. So Matt, again, we just updated this as it came through there on the 3rd, just last night. It looks like we're getting a cut sooner than we'd expected. So walk me through it.
Yeah. So like I said before, this is, we could potentially see these cuts. So we might get one in, I think that's June. June, yep. And then one in September, and then one in December. Now, this is assuming that we go into more of a recession, or the economy is weakening. But in the event that we're actually in maybe a stagflationary environment where the cost of things start to increase, and I do have some charts on this later on to kind of show where companies are thinking about their pricing and where wages are going. So if we do start to see some inflationary movement, these aren't as guaranteed or locked in, and we could see these start to adjust. Hopefully not to the upside, but maybe even less cuts or no cuts. But as of right now, one in June, one in September, and one in December, potentially bringing us down to the 2%.
Yeah, and the direction with this most recent outlook as of April 3rd is they're leaning more into the cuts. Like we weren't, on their last update, we weren't seeing this till October. It was more of like a 70% chance. Now we're at a 99% chance that we're getting that 2.25%. And then it's 50-50 that we actually make it down to 2% by the end of the year, which was nowhere near our radar in December and even in January. So it just goes to show the changes that we're seeing. And of course, according to Wawa, as we take the average across 10 lenders, we are looking at decreases in the fixed rates as well. And that 5-year rate looking much better than we were earlier on.
Yeah, the 5-year fix has fallen below the 5-year variable now, which Actually, the variable was always above the fixed, to be honest.
Yeah.
But to get it down, and you know what? There's 5-year fixes with 3 in front of it. So this is just an average of
Yes.
10 different lenders. But there are lenders out there that can get you a 3 in front of
At the
that
beginning of
5-year.
that number. Yeah, absolutely. It's a fantastic thing to see. So this, I mean, I think we've got these charts later on. I know you and I talked about it, but that small business optimism collapsing to 25-year low, and we've seen the data that just shows the massive growth in the public sector, private sector. It's growing, but not keeping pace anywhere close to that public sector, and then the self-employed just struggling along there. And so talk to me a little bit about this as we go into it.
Yeah, I mean, we can see that basically since 2009, this is the lowest consumer business confidence that we've had, and this all has to do with tariffs. And at the end of the day, if a business doesn't know what an input's going to cost, they don't know what a piece of lumber, a piece of steel, or whatever material they're using for their business is going to cost, they don't know how to price their product, or they don't know the costs that are going to be associated with it. So we're seeing that come through, that the business barometer, the business especially small business is falling dramatically off a cliff here, and way worse than what we saw in 2020 when the world was shutting down for a pandemic.
Yeah. And I just want everybody to kind of understand a little bit of how this chart works. Is the survey question that we're looking at on here is, how do you expect your firm to be performing in 12 months compared to now? And that's what's driving this number down.
Yeah, that's right.
Wage increases versus, Matt, talk to me about the divergence that we're seeing here at where we are in 2025.
Yeah, so like I said before, when it comes to the interest rates, we could see them either stagnate or increase based on inflation. And what we can see from the future price and wage increase plan is that the dark blue line is the increase in prices that businesses think that they're going to have to raise their prices. So, and then the lighter blue line is your wage plan. So we're falling just below the 2% average on the wage, but we are skyrocketing to the upside for the 3.7% that businesses are going to be adding to their pricing plans. So this is the thing that I'm keeping an eye on, is if this continues, it's going to be harder to cut interest rates as prices are increasing.
Yeah, 100%. All right, let's talk about our lost decade that we've had here in Canada in terms of our GDP. So I see that we've got USA highlighted here with their, let me get clear on that, 18.2% growth from Q1 of 2015 to Q3 of 2024, and then come on down the list here, and here we are, Canada at 1.4%. Now, I don't think that this is, Matt, this isn't meant to be a political show in any way, but what we do want to lay out is the information about what our governments are doing and how policy is going to impact us as citizens. And so I think it's important to take a look at these from time to time and see, like, okay, what decisions were made in the last 10 years that led to this? And if we're going to stay with the party that has been in power during that time, what are they changing that's going to turn this around? And if you're looking at the other guys, what are they going to do differently that's going to turn this around? Because over the next 10 years, we need this number to change. It has to get going in the right direction. We can't be below all these other nations. And so when you're going to the polls in a month from now, you need to make sure that you're considering that. And our goal is to bring you a lot of that information to hopefully help you make an educated decision.
Yeah, and in the next slide, we kind of highlight the contributing factors to why we're seeing such a low number there. We've had this massive population growth, but we're not getting the metrics from that for the increased productivity. So we're bringing all these people in, but the productivity levels aren't getting any better.
Yep.
So that's keeping the number low. Business investment, we're not seeing enough business investment in R&D and ensuring that we're increasing productivity through innovation, technology. We have a lot of unions in Canada, and that can sometimes stifle productivity levels as well, as because they try and keep as many people employed at their jobs, and innovation just takes a lot longer in those types of in unionized work to get in there. And you know, one of the biggest employers we've seen in Canada since 2015 has been the federal government, and for the most part, a lot of those individuals are unionized workers, and you know, they've got strong unions, and they ensure that their people are the jobs are protected. But sometimes it is at the cost of increasing the productivity. You know, and then also, you know, your infrastructure and your housing constraints. We had such a rapid population growth, and we were just unable to keep up with that in terms of building new homes. So that really skyrocketed our housing prices, but also our rents, that a lot of people rely on a stable rent, but you can't have that when you have such an influx of individuals and not enough places for them to rent.
You know, in our world, Matt, where we're helping clients both on the investor side, but specifically on the end user side, that are in the rental market, it's a painful conversation where people like used to have rent for, you know, $1,800, $2,000 a month for a family home, and that was manageable. And now a lot of those homes are $3,500 and more. And you see it on Facebook groups. We see it in our business where people are saying like, my landlord's decided to sell now, and I got to go find a new place to rent, and my rent has more than doubled from what I'm paying now, or what I had been paying for the last 8 years. And a lot of this contributes to that. And so it's just one of those things. Like, until we get our housing supply sorted out, that is going to continue to impact Canadians. And I think at the end of the day, housing affordability, to be able to purchase something, is very important. That's a prime topic. But if we can't get rents under control either, and just having a place to live, period, is becoming unsustainable or unmanageable, you know, that has to change. That can't be something that we're okay with as a country.
And I think the change comes from purpose-built rentals. That, you know, we had rent controls in place, so you saw large corporations pivot from building purpose-built rentals, and then all of a sudden it was the condo market that started to take on that extra slack in the market, we saw a lot of mom and pop investors take over the rental market. Yes. And there was a massive speculation in that, because for the corporations, if they could only increase their rents at 2%, you know, they understand that inflation is actually more than that. Just because the government comes out and says 2% doesn't mean so. So there was a massive shift away from that. And then Doug Ford got into power, and he said anything after 2018 won't have rent controls. And what we've seen is a massive increase in purpose-built rentals. But they've taken their time to get to market, and we're starting to see them really file into the market now. Yeah. And when we look at the rental stats later on, we're going to start to see that the prices are coming down because the inventory is starting to rise. And I'm hoping that we see more purpose-built rentals come in, so that there's less mom and pop speculation in the housing market, which might actually help stabilize prices long-term this way.
Yeah, and you're talking about resale prices now, not just rental prices, but that should stabilize with less speculation in there.
That's the thing, right? If you've got the average individual speculating on real estate because rent prices just keep escalating because of what low supply that we have in the market, if that can change, then the speculation part will hopefully adjust to the downside.
Well, and as interest rates have risen, we've seen that pullback just naturally because of carrying costs, right? It's been so much harder for these investors to carry those properties, and rents can't keep up with them. Just the nature of the way our landlord-tenant board and protections go, that you can't increase that quickly in a lot of cases, as well as even for the ones that aren't rent controlled, you're not going to find a tenant that wants to pay enough that covers the mortgage with those high interest rates.
Yeah, and I also think that the issues that we had at the landlord tenant board over the pandemic were mostly were caused by landlords that just didn't understand the rules, and both parties battled over that. Number one. Number two, there was individuals that just couldn't pay because of their job situation or that, and that had a factor in that as well. But if you're a massive landlord, you do this on a daily basis. You're dealing with tenants on a daily basis. It's a little, they know the rules. Both people know the rules, and so I think that had a big impact on it as well. But also too, when you go lower bound on interest rates, people are going to speculate in real estate because they understand that when you go lower bound, prices are going to accelerate just because of how cheap money is to borrow.
Yeah, great point. I love that you bookended that. All right, coming into the Toronto Real Estate Board, we're going to start taking a look at some market insights in terms of what happened last month. And we're going to start off by looking at all home types. And we look at this to get a general view of what's happening in the market. We're including everything to get a good temperature check here. And, this kind of just cruising along at the same point there in terms of median price. I think that's to be expected. And I can tell you that if you jump over to this year over year, this feels accurate when we're giving home evaluations, and we're talking to sellers that are still thinking about last year's price, especially at this time of year, because we did have a pretty good start to 2024, that we are not where we were last year. And while we're cruising along here at 0.3% of an increase month over month, it's not that a lot is changing, right? And we'll look at the different pockets, because for this to remain neutral, there's a lot that's on the downside, and there's a lot that's on the upside, but it's not quite as much. Nice to see the transaction volume come back a little bit though, Matt.
Yeah, that was a good increase. But when I was doing all these charts for all the individual places, there was a lot of color changes from green to red for March. Yeah. Not so much in the price and transactions for month over month, but more so for everything else when it's year over year and same time period this year from last year for the first 3 months. We definitely saw some decent decreases there. And, one of the big things standing out too is the termination volume. We're seeing a lot of termination, and that's having an effect on getting those prices up just based on that.
Yeah, those cancel and relist, the price adjustments, and we're seeing them in two forms right now in the markets that I'm watching. There are still some out there that are trying the holding offer scenario, and when they fail, that is a terminated listing, and then they relaunch at the price that they're going to try for their next strategy. As well, these terminations come from people that have been on the market 60 days and their price isn't working. They're terminating and launching a new listing. So when you see those go up, that's because homes aren't selling at the price that they came out there at, or didn't get the price that they want because they tried a different strategy. And so, yeah, up month over month, that's substantial. Up year over year, just goes to show why this is down. When we're looking at our median price, we're seeing a drastic increase there in terms of what we're looking at. All right, Matt, talk to me about where we are with our new listing volume. So you guys can see here 2025, and it's interesting because we were talking so much about active listings being high, but we were hoping that with new listings being stagnant over those first 2 months that you and I talked about, hey, maybe this will balance itself out over time. Well, boom, here we come with that new listing ramp up, and it's been substantial. Yeah,
it was quite the increase there. Most months seem to trend to the side, and then when you get into the March and Aprils, you'll have your upticks. But since 2011, only 3 other years have had a increase as high as this for the new listings, which was 2021, 2022, and what was the other one? 2012. So new listings is, you can get high new listings and still be able to sell a lot of homes, and then your active listings are lower, which will help the price. But if you're getting new listings and absolutely no sales, you're going to have
downward pressure on pricing,
downward pressure on pricing, and that's why when we look at the market report, I always highlight new listings as just in the gold color, because you can have very high new listings, but as long as the people are buying at the same time, you can still have price growth there.
Yeah. Active listings. So again, here's where we're continuing to see that uptick. And you know what's interesting here is that there are a lot of years, as we're looking at all home types now, it varies when we look at detached and condo, of course, but looking across all home types, it's not the highest we've had in terms of active listings before. Now, like you hinted at, the big difference there is what is the buyer demand for these listings. If we've got active listings high and buyer demand is high, it's all good. We're going to keep kind of trucking along at a steady pace. But if we are seeing buyer demand drop off and active listings increase, that's where we really see our sales soften.
Yeah, to be honest, I'm surprised that we're below 2, 4, 5 different years.
Yeah.
I thought that we would be higher, but clearly there are areas that are absorbing the new listings.
Yep.
And when we look into some of the other areas, we'll see that there are massive new making all-time high active listings.
Yeah.
But as a broad market over all TRREB areas, it's kind of in the middle.
Yeah, I think what's important to acknowledge as well is there are people that are sitting on the sidelines, right? Like, I know it as we talk to colleagues in our offices and other agents in our industry. That transaction that you thought was coming to market is maybe now holding off a little bit. They're waiting to see what happens. So in that sense, it as well, I think that there are people with moving intentions that are not coming to market yet. And same thing, I know that I think it was either Scotia or TD that released one of their surveys recently saying that they do see a backlog of people with intentions to buy, but they are just not coming out there as of yet. So I think this is what we're seeing there.
Yeah.
All right, coming here into sales volume, Matt, as we come off of active listings, I think here's the challenge. Yes, our active listings aren't like at all-time highs when we look at overall home types, but our sales, we are lower than everything going back to 2011 currently for the month of March. The only time that we might cross over this is for April 2020 when everybody was shut down and locked in their homes. But it's funny. Look, this is how quickly it can turn around. 2020, we're in the middle of a pandemic, and we jump. Everything stops. It becomes the lowest sales month on record for 10 years, and then all of a sudden, it shoots up by July to be record-breaking sales. So once we see people understand what's happening and confidence come back around, I know that a lot of that had to do with interest rates back when we were looking in 2020. But nonetheless, this is how quickly things can turn around. So if you are a buyer sitting on the sidelines, I want you to keep that in mind because you cannot time the bottom. So it's about just making smart decisions. And are you seeing an opportunity for what it is that you want to purchase? Does it look like a good deal? We talked a little bit about this before about making the market. Here's how it applies to buyers. You don't know what's going on with that seller on the other side. Matt and I have been watching some neighborhoods where all of a sudden a sale pops up and it's way lower than what we expected. Well, that buyer just happened to come across a seller that was motivated and ready to go, and they set a new price in the market. That's your opportunity as a buyer right now. And if you take advantage of that, you're going to be laughing in the long run because we know where real estate goes over the long term. But just to be mindful, it could turn around this quickly. That's just how our housing market goes in the GTA. We have way more people than we have houses. Right now, we're being impacted by outside influences. So once that changes or stabilizes, this is what our housing market has been known to do. Matt, when you take a look at this, what do you think about what I'm sharing there? How does that ring to you?
No, I think you're bang on there. And one thing that I'll add to that is, I feel like once we put a prime minister in place after the election on April 28th, we're going to quickly go into negotiations with Mexico and the US for a new trade deal. And I do believe that all tariffs will be dropped once that deal is done. And you're going to potentially see interest rates come down if a deal is done. And you're going to see a whipsaw to the upside as all that pent up demand in the market comes storming back. So there is a window for buyers to negotiate favorable deals right now and to get things a little bit cheaper, because I do believe that we could have a trade deal later this year at some point, probably closer to the summer, and things are going to start moving to the upside again as that transpires.
Well said. So what I'm hearing is there is a reality where this does turn around quickly, where this tariff stuff kind of fades away. I mean, even with the news that came out yesterday, we weren't hit in the way that we were anticipating being hit. So this could change pretty fast. And it's like they say on the internet these days, like, we're living in the broken timeline. Well, this timeline could shift pretty quick, and we could be in that very like escalating timeline just as quickly. So that's what I see when I see this. Like, you could look at this and see doom and gloom, and yeah, there's no doubt that we're feeling these low sales volume in our markets, like across the board. But when you see, I think when you look at 2020, you just see that example of how quickly things can pull up. That's the reality of it. And we've seen, even in previous years, we've seen these escalations just in the upswings, right? And so that is the trend. Honestly, that is the spring trend, and we're not seeing it yet, but it will come. As soon as there's stability, this is going to go like this. In all likelihood, if it holds true to the trends. As we look over our median sale price, again, this is accurate to what we've been feeling in the market in terms of that just kind of cruising along, neither up nor down, but in the short terms, as we saw like year over year last year, we're down 4.4% from the same time, and that's kind of what we're feeling. So Matt, anything stand out here other than, of course, just reminding people, it was March 2022, and really like that peak in February, this is where interest rates started to escalate, and then we saw that decline. Yeah,
I think TRREB overall is holding up decently, considering we've got the condos mixed into these numbers as well. So to be only down $40,000, just under $35,000 from last year is not terrible. We're hanging in there to the prices. So I'm glad that we're not seeing this massive decrease. I know buyers out there would probably want something in between the red and last year's numbers, but as of right now, I think we will trail behind some of between 2021 and 2024. But I think where you get to August, where we typically see some dips in prices, if we get, like we were talking before, a deal, you could see prices start to accelerate to the upside and maybe finish in between where 2021 was, potentially around that number, if we see strength on the second half of the year.
Yeah, I'm thinking that too. If it cruises along, kind of mirroring what 2021 was there for a second, then perhaps crosses over here.
Because if we're going to get 3 rate cuts potentially on the variable side, it's very possible that we do follow the 2021 mark.
Yeah, exactly. Like right in here too, because it's September and October where we're kind of anticipating those. So, maybe that is where we start to see it cross over. Like, I would say that my outlook is not I guess bullish for price increases, let's say. So I do think that we're going to kind of cruise along in this kind of space there. But like you said, if we get those 3 rate cuts this year, what does it look like at this back end, right? And then again, if we're talking about stability after our election, it could be a very different story.
I like when we've done a video before on how the end of last year was shaping up to be pretty decent. Mm-hmm. And then come around December, everyone realized that Donald Trump was getting in, and the confidence just fell out of this market. And I do feel that, if all this noise wasn't happening, our prices would be higher than what they are today. So I do think, you can see quite the acceleration at the end of the year, potentially in 2021.
Yeah, well said. Well said. Okay, now when we're coming into our freehold markets, honestly, Matt, this is where we'd actually seen, I'm going to take a step back. It was more in our detached market because we've seen a little bit of struggles otherwise. So just while we're looking across all regions and freehold, month over month, we did see a continued decrease. This is actually interesting enough. This is more so, no, sorry, it's not more so than what we saw for our overall, but in terms of our freehold, we are down that 0.6%. So again, just kind of cruising along. Transaction volume up similarly. We're seeing that kind of reflected the same way. New listings, like you said, I love that you're marking this out in gold because it's not good nor bad. They are going up. But I think the the difference there in terms of our termination volume, as well as we're seeing people try to figure out where the pricing needs to be for these things to sell. We're seeing that increase both month over month, and again, very similarly to our all home types, we're looking at very similar percentages there in terms of the housing market.
Yeah, I mean 39% on the new listings is a high number, but we're also coming off a weak year from last year as well. So, but yeah, overall trend kind of the same. I would imagine that it's the townhomes and semis that are probably driving the price a little bit lower.
Yeah, I feel that as well. I think part of that too is usually like the way our markets work is we kind of feed upwards, right? So when the condo markets are doing well, those condo owners become semi and townhome buyers, and then they move to the detached, right? And right now with the condo market doing as poorly as it is, just because of the massive amounts of inventory we're seeing there, we're not seeing as much movement upwards into the market, into that next segment.
Yeah, and I think townhomes and semis, a lot of first-time home buyers or move-ups, but you also, you're mixed in with the first-time home buyers and the investors, and I think those two are kind of really taking a step back right now.
Yeah. All right, coming into the sales volume, we're seeing that similar trend there in terms of our freehold. We are lower than all other years dating back to 2011. We talked a little bit about that big uptick that we could see as we see things stabilize. It is possible to see that turnaround. It's funny, Matt, I saw somebody post the other day about months of inventory decreasing, and I was like, are you out to lunch? I'm not seeing this in the data at all. We've got more new listings, lower sales, active listings are up, our months of inventory are up. So I don't know if somebody just got some of the wrong data there, but this is the increase that we're seeing. We're now hovering around that 4 months worth of inventory. I don't know if you saw the same post that I'm talking about. It's from somebody that we know.
From Ben Rabideau. That post has actually been, it was wrong. It was wrong data. They came out and they've already made the adjustment on that.
Yeah.
But I mean, we're still lower in months of inventory than what we saw at some points at the end of 2023 and the beginning of 2024. But we are, we're clearly making a trend line to the upside on months of inventory as we're in a holding pattern.
Yeah. And so again, this is just opportunity out there for buyers and sellers. You got to make sure your pricing is right. We talked about being the market instead of chasing the market, and months of inventory are a big factor in that. Okay, coming over to condos across all regions, we're seeing that kind of same trend. We're not quite at the 1% drop month over month, but when we look year over year, this has been our biggest decline in median price yet, of 7.7% in the condo market overall. A slight uptick there in transaction volume, but we're talking small numbers. This is not moving the needle in terms of what we're seeing there. And Matt, I think this is going to be still a little bit of a rough road for the condo market. But we have talked about opportunity in good pockets. There are family-sized condos that are doing quite well. In fact, some of them are doing better than they had even last year.
Yeah, the tricky thing with the condos is, like I said, there's a lot of purpose-built rentals coming on in the market too. And typically you would get, in most condo buildings, potentially around 70% of the buyers were investors. So in order for that condo market even to start coming around, you do need potentially rents to stabilize or start moving to the upside. So that'll be something to keep an eye on for the condo market.
Yeah, new listing again creeping up there, and specifically when we come into the condo market, we are now almost the highest year in terms of new listings coming in. We're not quite that way when we looked at overall, or specifically in the freehold. And active listings, this is where it really tells the tale. We have the most amount of condo listings that we have ever seen in the GTA. So it's important to note. And when you've got that many active listings, that's where you're going to see that downward pressure on prices, as well as some of those condos, just not moving at all because they're not a product that anybody is interested in at the moment.
Yeah, and we're up over 4,000 additional new active listings than what we saw last year.
Yeah, and so again, you can take a look at active listings here over the years, and just where we're used to hovering to where we are now. And Matt, you and I have said it, when you've got the most cranes in the sky of any city out there for a little while, this is what's going to happen.
Yeah.
Right?
And this doesn't even represent the amount of condos that are being sold as assignment that aren't allowed to be posted on the MLS and that are being sold off the MLS. This statistic would be even greater when you factor those in.
I think so. We're talking about 14,500 listings available on the market, condo market right now, and I believe the report from last month came out that there are 20,000 unsold new condos as well that are sitting there, and they're having a tough go of it. They've had their lowest sales numbers, like I think ever, for the month of February it was. So yeah, there's in the condo market, there's a lot of stuff that's going to have to start changing before we see any real turnaround, any meaningful turnaround in that area.
And there's also talk too with some condo buildings that they might not be able to form a corporation, so they're looking to potentially renting out some of these condo buildings and some of these units that have been unsold, so you could actually see even a larger spike in rental
availability.
Rental availability as well.
Yeah, that's an interesting idea. I think that when it's not something you want to see just in general, because it's a very bad indicator for what's going on in the market. But if that's something they can pivot and the builder can, still operate on, and flipping that to a rental building, even if it's for, I don't know how they would work it out in terms of time frames. It's an interesting concept.
It's interesting, but the problem is, like, once you put a tenant in there, you can't just automatically ask them to leave, right?
Yeah.
So it will be interesting to see how they navigate that.
Yeah, and when they came up with their business plan for constructing that condo, rental was not the end goal, was not how they figured it in. So everything was going to be out of whack there. And when we take a look at our median sale price here, we're down to just below 2021 at this point, where they came in at 600,000 and we're at 575 currently.
Yeah, and this is the result of massive supply in the market. And when I look at this chart, I see opportunity for first-time home buyers that want to live in a condo. The amount of negotiating power that you have right now is substantial.
Yeah, and it's not often in the GTA housing market that you get to wipe away 4 years of increases and then be able to buy into it, right? Talking about buying the dips, this is one of those opportunities, specifically in the condo market. And now, we want to talk about what's a buyer's market. Well, 6 months of inventory is very comfortably a buyer's market, and that's what we're seeing across the condo boards here.
Yeah, and I think you're not far away from getting 2020 prices, and if you negotiate and you're patient, you could find deals that are close to that 2020 now. You don't have to wait till later in the year to see that. There are people that are potentially needing to get out right away. And, we're only, 35,000 away from where we were in 2020.
Yeah. Now, there is going to be a lag effect. Like, we're going to see those interest rates continue to drop, and that will bring buyers back to the market, especially once we get our uncertainty kind of taken care of. There will still be a lag effect. It's not going to happen like right away, but it does let you know that there is likely a window there for when the ultimate opportunity is going to be. While we're sitting in this trough, let's call it, before we start turning this thing around.
Yeah.
Okay, coming specifically into Peel for our condo apartments and condo townhouses. Yeah, active listings, we're hovering there fairly high, higher than anything we've seen in the last 15 years. So like you said, a 66% increase from 2024 and 165% from 2023. And these were already after the market had started its correction, because that correction you could see very clearly from February to March in 2022. And here we are 3 years later, and we're still getting those big increases in terms of active listings. So this has been more of an ongoing lagging effect that we're seeing as these listings pile up.
And the interesting part about this chart is that yellow and that green, they're from 2013, 2014. You know, you really have to go down this chart until you find 2023 and 2024. So, you know, the increase of active listings has been significant for the Peel condo apartments and condo townhomes. So this is definitely an area I'm keeping an eye on, because the prices are going to be affected here.
Yeah, no doubt. And here's the flip side of that, the sales volume. We're down 37% from last year. And as we see that inventory stack up and sales volume remain low, we are seeing a lot of choice for buyers, which ultimately leads to downward pressure on our prices. And again, lowest we've seen in that 15 years.
Yeah.
All right, Matt, talk to me about Waterloo. Again, this tale of the condo market having high active listings, you know, no doubt. Is there anything particular you wanted to share surrounding Waterloo as well?
I think, you know, this is the Waterloo region, just not Waterloo.
Yeah.
But there's been a massive increase in the condo development. I mean, this is a growing region. There are a lot of colleges and universities there. So I think there was this, you know, additional demand for a lot of condos for that. But now we're seeing this potential pullback in students, potential pullback in immigration that this region was absorbing a lot of. And we're starting to see that inventory pile up on the market, and 101% increase year over year is quite staggering. And we're almost going off the page here. Everything's going to need to be readjusted starting next month. If this trend continues.
Next month, it will no longer say 600 at the top of that chart.
It'll be moved to 7. Everything will be moved down, and we'll see. Now, typically we start to peak out in May and June. So we should start to see a leveling off at over the next month or two.
Yeah, and this was a great reminder, because I know that Jen and I had an opportunity where we were looking at new condo developments out that way 2 years ago. Well, I guess 3 or 4 years ago now. Like, it was in that 2021, 2022 time, and you know, this is that reminder when you jump onto the bandwagon because everybody else is purchasing. This is where we start to see that kind of the rollover in terms of how the market has been going, right? And so if you're the one that's jumping on the bandwagon at the end, this is sometimes where you get into trouble, right? Yeah. Now, thankfully, we looked at that and we thought it was a nice opportunity at the time. We didn't do anything with it. But looking back in hindsight, had we done something with it, we would have been a part of the pre-construction condo buyer right now that's coming up to a closing, and the condo is likely not going to appraise for what it was. I remember one of the ones that we were looking at was I can't remember if it was a 1+1 or a 2-bed for $650 before you even added everything else in. So it was quite high for the area. And yeah, it's just one of those great reminders that, you know, when everybody's doing it, there's going to be a glut of that inventory. And if there's any change in what the status quo is in the market, that's where you can get caught, because you're buying something and it is speculating because you're anticipating future growth of, you know, 3-4 years. When you close, you're expecting that to have gone up. Otherwise, you're at a deficit. You're at a loss in terms of that investment. And it's not that you're moving into it there and then. So again, if you're buying new, you got to remember there is a speculation element to that, even if it's intention for you to close on it, because you don't know what the value is going to be in 3 to 4 years when it finishes.
That's right.
Awesome. All right. Termination volume. Yep. We're seeing that up across the board as condo buyers, as sellers just in general are trying to figure out where the market is, where they can get a buyer. And Matt, I want to say about this, a lot of that challenge is coming because we're not seeing enough showings. We're not seeing enough showings, and realtors as well are sitting there and we're saying that, you know, it's hard to tell you for certain that you need to lower your price because we're not getting enough showings. Now, Matt, in a traditional market, we can say, hey, if you're not getting any showings, you're easily 8% off where you should be in terms of where you're at in the market. But that's when homes are selling. When nothing is selling, it's really hard to figure out where that needs to be, other than you've got to make a drastic enough adjustment to bring that buyer to the market and see the value there, as opposed to what sold yesterday. All right, finally, let's get into the GTA specifically as opposed to the whole board there. Our first increase, Matt, we're looking at 1.6 month over month. Talk to me
That's
about
not
median
bad.
price. I like seeing that.
Yep, that's not bad. And even the transactions are up almost 14%. New listings are up 32.2%. Days on market fell by a day. But termination volume, again, still in the highs, 54%. 75% year over year on the termination volume. And then we can see, year over year, a 30% decrease in how many properties changed hands, with a 3.7% decrease in the overall price.
Yeah, I think what's important to note is we're just still off the pace, right? We're off the pace here. If you're doing your market analysis and you're trying to figure out where you are in pricing, yeah, we're still down from last year. So you gotta remember that when you're looking in and being like, that one that sold last year on your street, not where we're at anymore. And that's important to note. When we're looking at our new listings here, again, we're in the mix with a lot of other years. We're not that far off. It's really specifically when we start looking at condos where we really see this number fluctuate up. And I know that when we came into the detached market in one of our other slides, we're not even at the highest in that either, right? When you're segmenting an audience, we go back to some other challenging years in the market, and we're not at those levels of active listings or new listings coming into the market as well. Yeah, so active listings, Matt, up 54%. In comparison to this time last year, we are now at a high across the board. And again, we're looking at all home types here, so you got to remember a lot of this is being pushed by the condo market. Sales volume, again, across all home types. This is how far down we are. We're down off the pace for like the last 15 years, essentially. With that acknowledgement that can turn around pretty quickly, as we saw in the COVID years. All right, what do you think is going to happen here with our median price, Matt, as we carry through for the rest of the year?
Yeah, at the end of the day, if you're going to have active listings up 54% over last year, sales volumes starting to slightly come around, but well below where we've been over the last 14 years. I think there's some downwards pressure to come here. Either we're going to follow the 2021 line down into the summer, or hover a little bit below or above it. But at the end of the day, you have too many active listings, you're going to have pressures on that price to the downside.
Yeah, absolutely.
And when you look at the months of inventory, you're the highest you've been since going back to 2011.
Yeah. And then when we get back that far, honestly, we were never talking about these kind of numbers. None of our record-breaking numbers really came in until, like, even for sales-wise, was around here. So if you don't have the inventory to get the record-breaking sales, here's the months of inventory when we had record-breaking sales here and down here. 2021, this is our months of inventory. We had the most amount of sales on the Toronto Real Estate Board ever by a dramatic number. We were at 121,000 sales, thereabouts. Previously, I think the high in 2017 was maybe 110 or 107, and this is what the inventory levels were at that time. This is where we are now, right? This is the highest we've ever been by far.
And we can see from 2012 down to 2017, it takes time to get down to that level as well. Yeah. So, we're in an upwards trend now. This could be the year we top out, but it takes time to get down to the lower levels where you're going to see those higher prices as well.
Yeah. From 2012 to 2017, you're looking at 5 years there to get to those lower levels. And then, funny enough, 2017 to 2022, pretty similarly. You're almost at that, like, kind of that 5-year-ish cycle in terms of when we see those really low lows. And again, those low lows just means that it's a fantastic seller's market. And we talked about this on our last video, Matt. It being an amazing seller's market does not mean that it's a good market. Like, we've really veered off from the health of our market by saying it's only when it's like an amazing seller's market. That is not a healthy market either, right? No. You're at the two extremes here, and you want to be here in a balanced market is really, I think, where we'd all like to be. Both as citizens and as professionals in this industry. That is just a better place to help people. It's a better place to be for your family. So hopefully as we make some different policy decisions and everything kind of adjusts and hopefully stabilizes in our world, we can end up somewhere around here if we make the right investments as a nation and go the right route. All right, condos, Matt. Condo market has been an interesting one to watch here. It's been kind of unprecedented times. We're seeing a lot of stuff happening in new construction. We're seeing active listings pile up across the board. We're seeing people that bought and kind of speculated a few years ago not being able to close on those units now. But we're also seeing family style units do quite well in certain pockets. So it's been a very interesting time to watch the condo market. And it does take a close eye if you are a condo owner right now, or if you are a first-time buyer that is thinking about taking advantage of the opportunity we're seeing in the condo market. You want to make sure you get it just right, which is why we keep looking at the condo market so specifically. So Matt, why don't you take it away with some of the numbers we're looking at for the month of March?
Yeah, so we did see a little acceleration in the median price and the transaction volume. Price is up 1.1%, so it's 7,000. And the transaction volume up 9.7%. New listings 26%. We've definitely seen a little bit more maybe in the freehold as a percentage than what we saw in the GTA condo. And then termination volume around 50%. But where you see the data is the real changes the year over year. You're down almost 6% from 676 to 637. Transaction volumes down almost 32%. New listings about the same, up 25.3% that we saw month over month last month. Mm-hmm. And then your days on market have increased from 17 to 22. And then the termination volume too, you're seeing 70% more terminations this year than we did last year.
Yeah. And last year it's interesting because the tail was still the condo market last year, and it wasn't that the condo market had the same boost that we saw in the freehold market in the springtime. Like, we were seeing challenges in the condo market then. And I remember speaking to a couple colleagues, because I don't know what it was last year, Matt. I had a ton of condo transactions, ton of condo owners that I was helping. And as I was talking to colleagues and saying, hey, what are you guys seeing in terms of showing activity? What are you seeing in terms of movement? Everybody was saying the same thing, man. It is sluggish out there. So to see this continued decrease year over year in terms of our transaction volume and, of course, our median price just goes to show what a struggle we've seen there. And while we see median price go up a little bit, what I read into this as isn't that the condo market's turning around. It's that of the ones that are selling, because we're selling so much fewer than we're used to, the cherry-picked ones, the good ones are selling and they're maintaining their price or doing that a little bit better as buyers are starting to see value because they've come down in price so much, right? So they're now saying, yeah, I'll buy one of those. That is a good family size style. I'm getting a good layout. I'm in a nice building. I will buy that now. And I think that's why we're seeing that slight uptick in median price. It's not that the whole market's turning around. It's that those specific types of homes in good buildings are selling.
And listen, that's why they say location, 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 is because during markets like this, when you have a condo in a fantastic location, it's going to hold its value much better than ones that are a little bit further out of the way from transit and other areas like that. And, I understand that sometimes during hot markets, location can be a little bit more money, but it not having that location, the price decreases can be quite drastic as well, especially if you need to move from that product.
Yeah, no, it's so true. And it always brings me back to something that I was taught early on when trying to help people make those decisions. I had my broker at the time taught me it's never the wrong time to buy the right house, but it's always the wrong time to buy the wrong house. And again, in a hot market, if you're buying the wrong house, it's not necessarily that you bought in the hot market that was the issue. It's that when things turn around and units aren't selling, you are going to have to take a bigger hit to sell because it will only be the premier properties that are moving in those types of markets. Now, if you buy a good product at that time and you buy and sell in what is a down market, sometimes you can actually make a lot of money in a down market, especially if you're moving up, because the higher price homes typically take a bigger hit percentage-wise. It just makes sense. So you can actually do quite well. But if your product is so undesirable that nobody wants to buy it, that cascade, that waterfall in terms of the hit that you might take is just a little bit Listing volume, of course, we're seeing that uptick come, and I'm looking at this, our active listings being the biggest impact that we are seeing here in the condo market in the GTA. This does include condo townhomes, just for the record, so that we're aware. But yeah, we're at 10,000 when, let's say, even 5 years ago, I don't want to go to 2020 because we were only 2,600. But if you go back to 2015, 2016, you're hovering 6,000 units for sale. And here we are now at 10,000. It's quite drastic.
Yeah, from 2011, 2016, we were, you're averaging around 6,000 active listings. And then when you get in the hot markets like 2017 and 2020, you really see the fall off of active listings because all the new listings are just getting scooped up by the buyers. Exactly. So 10,000, that's quite an increase in what we're seeing sitting on the market.
Yeah. Sales volume, again, the lowest we've seen in that last 15 years. It'll turn around, but it's going to take a little while.
Because in a regular market, we should be around 3,000 sales right now.
Yeah.
So you're almost taking around 1,500 of those properties. So even with the sales in an average market, we still do have a considerable amount of active listings sitting there.
We want to get back to that balance is what's going to be important. Okay, so again, hey, good news, guys. You're higher than you were in 2020 for those people that bought them. Anybody that bought more recently in terms of the condo market, yeah, you're in that state of decline. And Matt, maybe this is a good time to just mention, when you are a first-time home buyer or when you are somebody that's buying a condo as a stepping stone, it is very important that, like we talked about, you're picking the right building, the right unit, location, because when things do change, you don't want to be in what is an intermediate or stepping stone property that you can't ride out the current market. Like, the markets always do turn around. The condo market this time around is being hit exceptionally hard because of what we're going through. But typically, the market will turn around, so you got to just be able to ride it out. And that's why it's so important to talk about those 5-year or 10-year plans. Or is this only a 2-year plan? And if it's only a 2-year plan, we need to get extra picky about what we're choosing here to kind of help insulate you in case the market turns over. Because here, if you were somebody that bought in 2021 or 2022 and you're coming up to your 3 to 5 year plan, it's going to be a little while before you can start to see equity come back when we're looking at the average condo. So yeah, I don't know, every time I see that, especially in the short term, it's just such a reminder that those things need to be sorted out. And even if you bought your house at the peak of the market in 2022, but it's your forever home and you're going to be there 15, 20 years while your kids are going to school or whatever, by the time this comes around, we're going to be up there anyway. So you're okay. You only get hurt when you have to sell the property, right? So it's important to make sure you got a good plan in place.
Absolutely.
All right, months of inventory, no doubt this is the same we've been seeing across the board in terms of our condos and condo towns. We are at all-time highs in terms of months of inventory. When we look back to when, honestly, even in here, it wasn't that the market was flying after 2017, but it stayed a lot more stable. This is, if anything, Matt, when I see this is the tale of what went wrong in our condo market, because we're seeing a challenging market here. Like, here was a challenging time for a lot of stuff going on in terms of the housing market. We had some new changes come in, but we were able to maintain fairly steady in terms of that inventory. And look at where we've gone now. A systemic change has happened in the condo market for Toronto, and that's why we have this issue of so many homes that are just not selling, or so many condos, that are just not selling.
So many condos, yeah. And again, people have been waiting a long time to be in a buyer's market. You're in a buyer's market right now.
Yeah.
I understand that there could be a little bit more pressure on the prices coming this year, but if you can negotiate a lower price right now and not have to wait, and maybe the market does start to change, it's hard to believe that it will in the short term, but there could be deals out there, and it doesn't hurt to at least go out and have a look and negotiate. And if you can't get it for what you want, you move on. But there can be definitely good deals there.
I'm going to say it again. You can go out and you can make the market. You don't know what's going on the other side of the table, and you can make the market right now with a fantastic opportunity. But you have to decide that that's something you want to do, and you can't. I think the biggest regret that some people have is they act on a fear instead of knowing what the outcome is that they're going for, and they let the fear decide if they're going to move forward or not. And that's what stops you from these times, right? And of course, ability. You have to be in the position to do it. But if you're in the position to do it, you should be seriously talking to somebody about making a plan to how go take advantage of this this opportunity in the market that we don't usually see, that we don't see all the time in the GTA.
One of the biggest things I always notice with investors of investing in anything is they want to invest in something, but they don't want to prepare for for that investment. And then when that opportunity arises, they start to get their ducks in order, but then the market's already started to shift. It's already started to move. Yeah. And then they start questioning, oh, well, maybe I missed it. Maybe I shouldn't. And then you've missed the entire upside. So now is the time to put your ducks in a row, get ready to take advantage of an opportunity.
Yeah, the indicators are there. For those of you that are wondering, like, believe in the data that's there. We have high active listings. We have low sales. We've had softened prices. Like, this is the trough. You know, whether there's going to be some minor fluctuations month to month and, you know, for the next 12 months, for sure. But in the long run, the big drop has happened. Now is the time to take a hard look at if this is something that you want to do. All right.
I want to add one thing. I know you're tight on time, but, you know, I think Donald Trump's attacks on tariffs and on Canada is potentially going to strengthen this country and open up more ties to the world for trading partners. And, you know, there's going to be some short-term pain here, but I think long-term, this could set up Canada for some exceptional growth.
Yeah, well said. I think we've been complacent too long, relying on our partner to the south. Like, this is going to kind of give us the kick in the butt to start evaluating other opportunities outside of just the U.S. Even within our own country, looking at breaking down some of those barriers between provinces will make a huge difference. And we haven't necessarily needed to before, or we haven't chose to do it before. Because, again, we talk about that lost decade, Matt, on our earlier slide about GDP and where we sit in the world. For 10 years, we haven't been doing anything. This isn't all Donald Trump's fault. Like, a lot of our challenges that our nation faces has been, I think, through complacency and maybe some differing poor decisions in policy, in my opinion. So it'll be interesting to see what this kick in the butt might do for us. It could be the best thing that's ever happened, like you said, once we get through the short-term pain.
Absolutely, I agree.
All right, talking about York Region and specifically jumping into the Freehold, I think this is one that a lot of people are going to want to hear about because this is where a lot of bulk of our homeowners are. We have a lot of detached and Freehold properties, specifically here in York Region, and it's nice to step away from the condos for a minute. So it's an important market segment for us to take a look at. Now, we are seeing a decrease there in our median price month over month, going from $1,335,000 previously down to $1,310,000. And this, Matt, to me comes through as talking about making the market again. When you're seeing homes up in neighborhoods and then one home sells for significantly less than what you thought it would because nothing had been selling and they decided, hey, we need to sell, we're going to sell this for less. Now everybody's got to follow suit because that's what the buyers are expecting as they dictate the prices. Yeah. So what do you think? Is that something that, again, that you're seeing around York as well?
Absolutely. And to be fair too, when you have the increase in new listings as well, sometimes they come on to the market and they're priced lower than their competition. So the competition has to sit there and say, you know what, we need to make a readjustment to be competitive with them as well. So I think that's probably what's going on with there. But the big thing that stands out for me here is, you know, year over year down 7.7%. Is quite the uptick there for me.
Yeah, and thank you for bringing our attention to that because that is the big difference. And again, when we're sitting down and we're talking about what your home might be worth today, a lot of sellers have that memory of the one that sold last year in mind because it just makes sense. It was a nice price in comparison. They feel good about that. It's the last thing they were paying attention to. But this is the reality of where we are, is we're down 7.7% year over year in terms of our freehold properties when we're looking at median price. And we're seeing that transaction volume uptick month over month. And as, again, year over year, as I bring my mouse down here, you can see this here. These are listings that are terminating. They're coming off the market because they didn't sell. Now, that could be because they tried to hold offers and didn't get what they were looking for, so they canceled and relisted at a higher price. Or it could have happened because they've been on the market for a little while and haven't sold. They're saying, okay, buyers aren't seeing value in our price at the moment. We need to make an adjustment and move that price downward. And again, you can see that even month over month, we're seeing a 2% decrease in the asking price, in the list price on those listings. And that's coming through the form of these terminations. And as well as when new listings hit the market, as we've seen, we're up 32%. They're looking at that home that's still on the market and hasn't sold. They're going to come out typically under that price if they want to make a change. If they want to be the one that sells, they can't look at the other guy that's doing the same thing and be like, we're going to get a different result. It's just not how it works. So at the end of the day, I think that downward pressure on pricing is going to continue for now. And this isn't doom and gloom, guys. There are still great opportunities. If you are somebody that is moving up in this market, do it now. Down markets are the best time to make that move up purchase. It's fantastic. The home above you has taken a bigger hit. 2% drop on 1.8 versus a 2% drop on 1.1 or 1.4, very different numbers. So you're actually gaining, you're actually making money on that purchase on the move up when we're seeing that down market, provided you can afford it and everything's going well. All right, new listing volume. We're right in the mix. Not bad. Not bad when we're looking at freeholds in York Region. Right in the mix. I think to be expected. When we see active listings here, now we're starting to see a little bit more of that trend upwards in terms of outpacing the other years for active listings. I thank you here for highlighting the only times we've been higher, 2018 and 2019, coming off of the big change with the Fair Housing Plan that we saw in 2017. And
the interest rate increases from 2017 had a little bit of an impact on that as well.
Absolutely. Yeah, absolutely. And so, like we said, these were slower years in general. 2018, 2019, we were in recovery time then, right? And it's funny because of all things to kickstart the housing market, it was the pandemic. In a different timeline, it would have been very interesting to see where our housing market was now if 2020 had never happened. And it was just magically 2025. There was no COVID. There was no pandemic. Be very interesting to see where our housing market was, because like I said, those were the recovery times, and again, the only times that we've had more active listings in our freehold market than we do now. Sales volume, Matt. This is the rough one in every housing segment when we come to it. What's the sales volume? How do we stack up to previous years? We're down 38% from 2024, and Matt, how does that look for us going back to 2011?
Well, when I made this chart, I was looking, I highlighted kind of, we typically see the bulk of the sales for the year, between mid-February, March to May, a little bit into June. And, we are stagnating here through some of the biggest increases in sales we typically see during the year. And I've highlighted that, during the pandemic, we saw this massive drop off, but we saw the consumer, this is what consumer confidence is what got destroyed here. And that's what we're seeing right now. We're seeing consumer confidence get destroyed. So it is possible that later in the year, just like we saw in 2020, we see a rebound in sales at the second half of the year.
Yeah. And it's funny because I go back to the COVID days in 2020 in April and May. It was a runaway train. It was just a runaway train in terms of how those sales upticked, and we saw prices start to do the same thing. They lagged a little bit, but they still did kind of that same effect. And I have buyers that purchased right in here in April and May. And looking back, it was just such a victory that they purchased at such a low time. Now, obviously, this chart is sales volume, but prices did the same dip as everything locked down. And it's just great to see that improvement, because it was a bold move. Like at the time to make that purchase while we were all still in lockdown, it was a big decision to take advantage of. But we saw this dip. We saw this pricing change happen, and all of a sudden, because they weren't brand new, we had been starting to look kind of in this time frame here, and then all of a sudden we saw homes that were out of our price range previously all of a sudden come down to something that was very manageable, and they're like, well, heck, we could buy that and we could be there 5-6 years. And funny enough, both of them are still in those houses today, and they bought at a fantastic time. So this is what we're talking about when we talk about the opportunity that we're seeing now in 2025.
Yeah, and you can see in the next chart the dip in price that we saw in 2020. that ultimately led to that good price decision. And it did. By the end of the year, we were significantly higher than where we started. We were significantly higher than March, right before everything shut down. But where we're sitting now is, unlike the condos, we are still above the 2021 prices. It is a little shaky there. Will it come down to that line and surpass it, or will it start to increase as the year goes on? That'll be kind of what we're going to keep our eyes on. But, as far as where we were from last year, we are down 110,000 on the median sale price.
I think what's important to note is when this is happening, like, everybody's in the thick of it. You're not fully aware of where this thing's going to go. And even if you look at how 2020 ended to where the following year started, even just that jump from December to January was substantial. Right? And so if we're expecting 3 more rate cuts this year, and we see some stability with what's going on with tariffs and our economy and our new prime minister, things can turn around in the GTA housing market really quickly. And that's one of the big takeaways I want everybody to have today, is just to be mindful of how quickly this can turn around. So if you see an opportunity now and you've got that chance to make the market, be the one that does it, because this can just uptick in a hurry.
Absolutely.
Months of inventory, even on our freehold. Here's where we're getting to when we talk about the condo. They were maxing out before, kind of on this type of scale. We're up there, but we're seeing like that 2019 levels in terms of freehold inventory. And it's funny, Matt, it was the freehold market that I felt had the biggest impact and was the most sluggish after 2017. And a lot of that was because the huge gains that they saw in 2015 and 2016, and everybody just pulled back and said, whoa, these things are arguably quite overpriced for what they are. And I know some neighborhoods in particular, they really felt overpriced. There was nowhere near what the value they should have been. And I think that's where you're seeing we're back into a similar time there.
Yeah, and I think during that time as well, York Region was definitely one of the areas that saw some accelerated speculation in 2017. And I think that's why, as the interest rates rose, as some of the new rule changes happened, we saw such an influx of inventory hit the market.
Yeah. All right, Matt, it's time to start talking about what's going on in the York Region condo market. And when we hop in here and take a look, it's been it's been a lot of the same that we've been seeing in other areas, except we are seeing a slight uptick month over month in terms of our median price there. We've seen that same slight increase in transaction volume, nothing that really moves the needle. Median days on market, wow, bang on, holding the same. Termination volume up. And so when termination volume is up as high as it is, and we're seeing median month over month median price growth, Matt, what that tells me is back to our original conversation of like the right products, like those right layouts, family style condos, they're doing well. It's the rest of the stuff that's sitting. And we're looking at smaller transaction volume, which is why it can translate to growth.
Yeah, we're still down 32% with the transaction volume year over year. So yeah, we've got a little bit of an uptick month over month, which is a good sign going into the spring market. But we're still quite down from year over year. We're down 5.5% on the median price year over year, but it is good to see a 1.8% uptick. But like you said, all those terminations coming in, prices starting to reset, and we might start to continue to see that uptick as long as everyone's getting priced right.
Yeah, and so if you're somebody that purchased last year, or you're getting ready to sell and you're remembering that condo that sold last year, you have to take note of this right here, that year over year, our median price is still down 5.5%.
And for new listings, so we can see the new listings in the condo, to start the year, we were already above where we've been at a lot of different points since 2011, but we saw an extreme acceleration to the upside for the month of March, bringing us keeping us in the all-time high category as we outstrip what looks to be 2022 there, or 2018. But we are a 28% increase over 2024. And this number is kind of parabolic here. We'll see if it rolls over like it has in the past in April. but it will definitely be interesting to see how much elevated the condo market in York Region is going to stay up there. And looking at this, it is, if we're going to stay up at at these levels, prices will year over year definitely take a hit.
Right, and what we've talked about before is we have seen years where we've had high new listings, and that's okay, provided that we're seeing sales, provided that those are getting absorbed into the market by people purchasing them. But what we're seeing happen here is our active listings are stacking up. You'll see the sales in a minute, but you guys can tell already looking at this chart, where the break point is. We've got new listings coming up at quite the number, and we've got active listings still sticking around. So what that means to us, and before I get there, Matt, 53% increase year over year. But when we I wanted to see sales volume, but I guess I'm going to go back to the market report here at the offset. We're looking at 222 units selling when we're talking about over 1,254 active listings, and that's the difference maker, where you can see here in our median price.
Yeah, and median price, we are still up above the 2021 prices. We've seen some areas where it's dipped below the 2021 prices. So it is kind of leveling out here. But again, the active listings is what's going to dictate where this price range is potentially going to go. I think it has the chance to kind of follow along where 2021 was. But we'll see how active listings play out, because that's going to be the biggest key as to where prices are going to go for the York Region condo market.
Yeah, and so here's where we're seeing that active inventory stack up, and we're going to put this in terms of months of inventory for you. So how many homes do we need to sell? How many, if nothing else came on the market, how many months of the current rate of home selling will it take us to get rid of all that inventory? And we're sitting at 5.56 months of inventory, which is definitely balanced leading into a buyer's market. And anybody that's exploring the condo market right now, that is definitely what you feel. Other than, as we talked about, those premium buildings that are well taken care of, great condo corps, great property managers, and with those fantastic floor plans that families want to buy in. So until we see all of that stuff getting scooped up and less inventory hitting the market, I think we'll continue to see that downward pressure on pricing as a whole. All right, let's get near and dear to our home here, Matt. We're coming over to new market freehold listings. This is an important segment for a lot of people, especially in the last couple of years, as we saw obviously some record highs through COVID, and now people wondering where it's at, and especially the people on the sidelines wondering if, is now the time to be buying. And when we look at our month over month median price, we still see a bit of a softening, and a lot of that came last month. I will say that continued tariff talk, the insecurity and lack of confidence in the market, it's going to have the softening on pressure and the prices. And the reason we're seeing that is because our transaction volume is down. While we see new listings continuing to rise, we're up that 38%. Median days on market down just a little bit compared to the previous month, and our termination volume not as bad as the condo market, Matt. So I think our pricing's getting a little bit better in the freehold market there in new market. We just need to see more buyers come into the market. But here's the big decrease, I want to say, year over year when we're looking at transaction volume. 91 in the previous year compared to our 44 this month.
Yeah, so that's a big change there. Going from 91 to 44, 51% decrease. Need to see some activity pick up on the sales side in new market, because those new listings are up by 38.3%.
Yeah, we're continuing to see that softening in price year over year, down 5.6% in comparison to last year, and that's an important number to be mindful of. We come over here to new listings.
Yeah, new listings. So we're kind of in the mid-range, actually a little lower, to be honest with you. There's only two other times we've had slower new listings hitting the market for March. So that is a good sign that we're not outstripping some of the years past, because if that was happening, the discrepancy between active listings and sales would really be growing. And active listings or months of inventory, I think we'll see is already quite elevated. So hopefully this trend continues on its regular path, because if it goes any more, if it accelerates to the high side too much, I think maybe for sure we're going to get a little bit of pricing problems there.
Yeah, I'm hoping that we see a rollover here, just like we do in a lot of other years, where we see April start to slow down in terms of the new listing volume hitting the market. But it's I think it's important to know there are people sitting on the sidelines that do want to sell and have been waiting for the right time. So it'd be interesting to see if this does uptick or maybe even just level off in comparison to previous years where it rolls over. And with those new listings being lower, like one of the third lowest years on our chart there, dating back to 2011, even though we're not getting a lot of home sales, we aren't seeing active listings reach new record highs or peaks. There are 2 years where we had more active listings. So we are outpacing the majority of the years in terms of active listings right now. It's not all great, but at the same point, we're not setting new records for active listings in the freehold market for new market.
Yeah. Only 2018, 2019 saw higher listings. Again, a lot of investors, a lot of speculation after the 2017 market. You know, a lot of people after that market corrected started to get out and put their properties on sale. So we are trending upwards into that trajectory because of what's potentially happening with the tariffs down south and the uncertainty in the market.
Yeah. Coming over to sales volume here. This is where it's quite visual, Matt. Talk to me about this.
Yeah, we're 52% decrease from 2024. We can see that this is the worst sales volume for March that we've had since 2011. And you know what? It's surprising that it should be accelerating to the upside. And the fact that it has rolled over to the downside, we haven't seen anything like that since 2020 when the pandemic happened. And this was when we basically shut the entire country down. So that's a visual of just how much of an impact buyer confidence in this market's having right now.
Yeah, and it's interesting to note, even though the lockdown happened in March of 2020, they still saw a slight increase from February to March, just with those first couple weeks of March before the lockdown happened. In terms of seeing an increase from February to March, where we're seeing this rollover of declining sales month to month, as well as, of course, the 52% year over year. And, this is, when you look at TRREB as a whole, this is the type of numbers we're talking about. We are setting record lows in terms of sales volume for month over month.
And it's interesting, too, to see a rollover this significant from February to March at this time of year.
Yeah.
February, March, April is typically when we get the most activity. And for that to roll over right now is pretty extreme for the new market area, I think.
Yeah, I think it's that note that for those of you that still want to sell earlier in this year and you're wondering like, I'll wait it down a little bit, it should get better. I don't think that that's the market that we're in right now. I don't think that, better is right around the corner. You're going to have some regular month-to-month fluctuation, but I think we're seeing more of like a status quo in terms of the currency of the market. So yeah, I think it's more one of those like, don't wait, get out there now, as opposed to if we're seeing that continued stacking of active listings and new listings continue to go up like they were. Almost better to get out there now than later. Like don't wait for the petunias to look good.
Yeah, we've seen other areas where active listings are significantly like making all-time highs, but not only making all-time highs by up by 40-50% from the last all-time high, or not all-time high, since 2011 that we've seen.
Yeah.
So the fact that we're not there yet with new market, you're 100% right. It's probably best to get out now before that number gets a little bit too high.
Yeah. I'm in another group chat, and it was just brought up before you and I started recording that the March numbers are the lowest they've been since like 1988 or something silly like that, just for a monthly number. And it's crazy. I remember, when we were doing our video there in August, worst August on record for 25 years, right? Like that's some of the, that's a bit of the market that we're in right now. And it's not to say this is all doom and gloom, but you have to be aware that there's a ton of listings out there and there's not a lot that's selling. We're hitting record lows in terms of what's selling on a monthly basis. All right. Actually, sorry, we got into it there, Matt. We didn't talk about our median sale price. Like we said, we can see that little bit of softening there, and yeah, we're just outpacing 2020 and 2021 currently. So again, as we've talked about, years kind of being lost with this market correction. Not the worst that we've seen. Like, we're 4 years back now, and it'll be interesting to see. Like, I don't think that we're going to surpass this dark blue of 2023. I don't think that we're seeing that uptick coming along. But that's why we're doing these kind of calls and why we're breaking it down. Is like, you can expect more of this middle of the road, kind of like more of a horizontal line than any upward fluctuation that we're anticipating. I don't think we're gonna hit big lows. I think it'll be, if anything, we'll just see a little bit of this kind of up and down. What are your thoughts on that, specifically when we're looking at the freehold market here in Newmarket?
Yeah, I think if everything's status quo this year, and there still remains to be some uncertainty in the market, and interest rates come down still at a slower pace, maybe 1, maybe 2, maybe 3 over the stretch of the year, we could be following the 2024 numbers with a gap to the downside as we, decrease into the end of the year. This is typically the time of year when we're going to get the best prices for these properties, and that slows down as the year goes on. So I don't think we're going to see, anywhere close to the 2020 numbers, maybe near the end of the year, but I don't think so. I think there's too much money put in the system that's probably unattainable. But I think we'll follow quite close to 2024 by the end of the year.
Yeah, it's interesting to look at this, because we did see, we were kind of cruising along, and there was that little bit of an uptick there around June in comparison to what we saw in May. And this is where our interest rates first started to happen. This is where the cuts first started to happen. And you and I talked about it really early on, where we had referenced a great Wawa report, where they talked about once those cuts start to happen, we start to see a lag in falling prices. And sure enough, here it is, the second half of 2024. There's our bottom, the worst that we saw in August. And then it kind of picked up, and we were going to trend back upwards a little bit right before the beginning of this year. And that's when, of course, all the uncertainty kicked in with the presidential election down south and all this tariff talk. So, Matt, talk to me about months of inventory.
Yeah, months of inventory, like we were mentioning before, this is the highest we've seen since 2011. We saw that spike again after 2017. There was a lot of speculation in Newmarket. A lot of investors piled in. After everything kind of subsided at the beginning of 2017, a lot of people were maybe regretting those decisions to purchase, but also a lot of people put their property on the market to try and get those record prices. And that's what kind of gave us so much of that months of inventory right after the beginning of 2017. And then those people realized that those prices were gone now. Interest rates had risen. Rules around the industry had changed, around housing had changed, and so we saw that uptick. And then slowly, as we went into COVID, interest rates went down, and we saw the market rip again. So we are making an upwards pattern here, and it does take time once we peak out here for it to roll over as well.
Yeah. It's so funny looking at this chart, because it expresses how I feel. Because in 2017, when that fair housing plan was announced, it changed the game for buyers and sellers overnight. And you can see this happen literally overnight. It just skyrocketed straight up. And that's how quickly things change. We go back to the fall of 2008 with the financial housing crisis down there in the US, and what we had experienced up here in the north, and just the instability in the financial markets. Same thing. I remember being at open houses and it being super busy. The very next weekend, crickets, all showing stuff. Like that buyer confidence is the biggest thing. And when you mess around with it, like when our government enacted the fair housing plan, they did it overnight. They made the announcement and they said effective immediately. And that just threw everything up in the air. That ruins all confidence, because you're not giving us time to adjust with the plan. We're playing by one set of rules, and now you just changed it. And then you look at the change in rules, and like you said, you look at the changes that came in interest rates, and you get this impact here. But I gotta say, it's that that overnight change, that changing without letting everybody know what's going on, giving the market time to adjust. Kind of like what Donald Trump is doing with tariffs. He's saying, hey, I'm not saying in 5 years we're going to come independent. I'm saying that tomorrow I'm enacting these things and you guys all have to jump and try and figure it out. Now I'm stopping. Now I'm going. Now I'm stopping. But that's something that will make this change happen so quickly. And I love seeing charts like this because it just reminds you of like how it was when you were in it, because that's exactly how it felt for us as realtors and as we were helping our clients work their way through. All right, Matt. Now, hometown. We're talking about Aurora here. We're looking at Freehold in particular. And this is something that, we've experienced. As you talk to local realtors, they'll talk about the same thing. We're seeing that month over month softening in prices. So we're down 2.4% comparison to February, which was already a little bit slow. Transaction volume, nice though. We saw a change in transaction volume. We're up a little bit. I mean, numbers percentage-wise, we're up a lot, 57%, but moving from 21 to 33 units. But the rest of everything that's going on out there, we saw a huge increase in our new listings. And of course, we'll get to active listings there on the next slide, but that carried over. This is the highest termination volume we have seen, Matt. 185% increase in terminations for the month of March. That is a staggering number.
That's huge. And even year over year, to go from just 22 terminations last March to 77 or 250% more it's quite a bit there. It's telling me, and I'm sure it's telling you, that there's a lot of price adjustments potentially that need to be made in that market.
Yeah, and you know what? I will. Let's read into it for a second. Those price adjustments were made. The termination happened. New listing came out. We can see the uptick in new listing. And hey, transaction volume went up. If you guys price it right, the buyers will come. Now, I say that because that's a true statement, but it does not mean that there's enough buyers for everybody. So at the end of the day, pricing is 100% like the most important thing that you can do for your listing to get it sold, for your home to get it sold and done right. But at the same point, there are just a lot of active listings out there with a smaller subset of buyers that we have now. When we're looking year over year, median price down 9%. That's a big hit. When I see that, Matt, that's also one of the biggest hits we've seen, particularly in the freehold market, for year over year declines.
Yeah, we did have 68 sales last year. We're down to 33. And in Aurora, you can have prices that are quite high on freehold homes. And you can have some of the townhomes and semi-detached that are a little bit less priced. So you can get some pretty big swings there when the sales have been cut in almost half there.
Yeah, that's fair. We are using median price that should help alleviate some of that, but with such a small sample size of only 33, it's not going to account for everything. So yeah, that is very true. And when I look around, year over year, there's definitely been a softening. There's definitely been a softening for sure, but maybe not in every pocket, because I've seen some neighborhoods holding their value quite well. So again, it's like everything in real estate. It's a local market, right?
Yeah.
All right, talk to me here about new listings, how we're sitting for Aurora.
Yeah, new listings, a lot like new market as well. We've seen 4 years where we had higher new listings for the month of March. It's been a steady acceleration to the upside. The other years that had more were 2022, 2021, 2017 after the run up there. So we are accelerating to the upside. We should see a lot more new listings coming into April. But the bright side, I guess, is it's not as bad as what we see in a lot of other areas, with the new listings breaking to the upside in some of those areas significantly more.
Yeah, and now when we come in here to active listings, while we were up a little bit there in sales volume, which was nice, was not significant enough to make a difference in terms of what we're carrying for listings out there inventory-wise. We're sitting at about 205 active listings, and the only years higher than that, we had 2019 at 224 and 2018 at 239. And it's, after COVID, it's so easy to forget for some, I guess, that in 2018, going into 2020 even, the market was still sluggish. Like, it was still sluggish. There was a lot of inventory, especially depends on where you're working. Like, York Region got hit exceptionally hard, I would say, particularly the detached market, because from 2016 up to that April 2017, there was such a run up on prices that it just did not make sense. There's pockets that, of course, hold their value like that, but when all those are sold, that spillover happened into neighborhoods that should not have been selling for what they were selling for, and you had that speculation and you had that competition, and so immediately afterwards, that's kind of what we were feeling from that change.
Sales volume. Some of the increases we saw in transaction volume is because of basically how low we were heading to the wrong way, going from January to February. And then now we've seen a bit of an uptick here in March, but we are significantly below even where it appears we were in 2020. If you look at April and May for them, just how low they got. So definitely sales volume is lagging big time from what we've seen in prior years.
Something that's messed up is we sold more freehold houses in Aurora when you weren't allowed to leave your house than we did this month. Yep. That's the reality of where our market is right now. March of 2025 is below what we saw for April and May of 2020, when a pandemic had just started and we were not allowed to leave our houses. I remember they were telling realtors we needed to print our real estate license to show that we were in fact realtors, because we were deemed necessary. I forget what it was. Yeah, we were deemed an essential service, and so. And I sold houses in April of May that year. We talked about this on one of our earlier slides. One of the best purchases our clients made were buying in that little slump there before everything took off afterwards. But wow, when you frame it that way, Matt, to say that we sold more when we were locked down for the first time ever than what we sold last month.
Yeah, that's wild.
Like you said, median price it's the same thing when we go back to sales volume. Yes, we're up, but we were trending the wrong way, especially for this time of year. And the sale price, same thing. We're trending the wrong way. For this time of year, we should be going the other way. And there's no doubt, you know what I think this is going to be, Matt? I think this is going to be a short-term issue. When you think about the whirlwind that tariffs have been in terms of in the news cycle, and wondering, and what's this trade war going to look like? Who are we aligning ourselves with? What are they going to do? End of January, all of February, and then spilling into March with the delay to April's announcement. I get it. I think that hopefully we're behind that news cycle a little bit, that people can just relax and get settled back in to what it is that they want to do. And this should hopefully, I'd imagine that this will turn around. And I think that we can just hopefully surpass what we had there in 2021, which is a crazy thought, that median price would be higher than what we're seeing in 2021.
Yeah. I wasn't expecting pulling this up to see that it had dropped below the 2021 prices. Typically, Aurora holds its value quite well compared to a lot of other cities.
Yeah, and I mean, let's take a look here at 2024, and it crossed over a couple of times, but ultimately it did finish the year above 2023, which was fantastic news. Like, this is where you and I were starting to get excited last year. We're properly seeing year-over-year gains again, right? And that's always what we want to see for people that are purchasing. The following year, they want to know that their investment's worth the same or more. And so it was looking good. It was really looking good after where some of the earlier parts of the year had been. And then hopefully we'll see that tick back up, because that is a little surprising to see after where we were headed. Talk to me about months of inventory.
Yeah, we had a little bit of a rollover in months of inventory to the downside there. Mm-hmm. But going back, again, we've had high levels of inventory in the Aurora market. during the 2018, 2019 markets.
Yeah.
We haven't broken past that, which is a good sign.
Yep.
With all things considered going on here. But it does look like it's starting to roll over a little bit here. So it'll be interesting to see coming into April if we start to see sales accelerate, the amount of new listings starting to level off. We could see this number come down, but we are up at 6.61 months of inventory. So it's quite a high mark for Aurora.
Yeah. All right, coming in here, looking at just the detached numbers. This is an important breakdown and distinction because we were watching that semi and townhome market a little bit, and it was struggling there for a little bit. And so it's interesting to see that we're starting to see this swing around here, specifically when we talked about detached. And as we go back to our earlier slide there, Matt, when I referenced some of the neighborhoods doing well, I am thinking about that detached market. So it's interesting to see that it's being reflected here in the data.
So when I pulled up this originally, I'd noticed that we had been talking about the detached in January and then in February, and we noticed that the February numbers were coming down to meet where we were in 2021.
Yeah.
Now, when I was looking at the data just detached by itself, I realized that we had swung up to the highest levels we've seen since 2024. We're above those numbers. So I said, okay, let's dig a little bit deeper. But when we come over to the sales volume, we see that just 19 properties have sold. And when we look at 24, 23, 22, well, there's significantly more sales happen. So what this is potentially telling me is that maybe we don't have enough sales to accurately reflect the price. Maybe a lot more expensive detached homes sold in the month of March than what we saw in February. So it's just a number to keep our eye on as next month rolls around. Maybe it will start to level back down because I don't know if we had enough sales to accurately reflect where the price is going for the detached market.
Well said. It goes right back to our market overview that we showed at the top where we brought up that very point. And when you look at this and you see that and you listen to what Matt's saying, what he's talking about is the homes in the premier neighborhoods, or maybe what would be the more expensive ones, seem to be the homes that are moving right now. If you're trying to understand why we're seeing this uptick, but where could the discrepancy potentially be, it's because our unit sales are so low. So we don't know for sure if this is truly reflective of a change in the market, or is it just that the homes in the nice neighborhoods or the more expensive neighborhoods are the ones that are selling. Love it. All right. Georgina, we're moving into Georgina to talk about specifically the freehold market, which is fantastic because it's mostly freeholds up there in Georgina. We're going to talk now about a month-over-month median price boost to 1.9%. That's fantastic. And I will say this, as we come off the discussion about Aurora and not enough transaction volume to wonder if it's looking good, not bad here. We're seeing 45 units sell. It's down 11.8% in comparison to the 51 units in the prior month, but we're only down from 67 units the previous year. Like it's not great, but it's not as drastic as we've seen where in some other areas we're moving from 90 sales a month down to 28 sales a month. So yeah, Matt, I think that's a positive sign. We are seeing terminations up again, but not as high as we've seen in other areas. Remember, I think it was Newmarket originally, we were seeing like 250% increases in termination volume. So to see only 29 and only 8.8 year over year, I feel like Georgina, they're just getting dialed in a little bit better on their pricing to where buyers are perceiving value.
Yeah, I think Barrie, like the Simcoe area, definitely Barrie and Georgina, which are two markets that we cover on the northern end. You know, they really saw a pullback last year, more so than a lot of other areas. So I think they've already gone through some of the bulk of their rollover right now. And we can see like even new listings year over year, they're down, right?
Yeah.
We're down one new listing. And where else have we seen that in the data points?
Nowhere.
That, you know, that any place is less than where they were last year for new listings. So that's a great sign to kind of show that, yeah, we're up 22% month over month, but year over year, that's actually holding nice and steady, which is a great thing to see. So yeah, and then again, the termination volume year over year, only 8.8%. So those are two positives. Yes, we're down 3%. Transaction volumes are down 32.8 year over year, but we were starting to see some strengthening into the back of the year last year for Georgina and for the Barrie area. So this is definitely one to keep an eye on as it progresses through the spring market, as I think it might have a decent spring market as compared to some other areas.
Yeah, I think we're going to start to see these losses start to diminish more as we roll into April and May in terms of our year-over-year numbers, because the big boost that we saw at the start of 2024 had slowed down by that point. Really, like, you were starting to feel it at the end of February, well into March, you were seeing the changes. So I think April and May we'll start to see this really change. Talk to me about where we sit with new listings.
Yeah, new listings kind of middle of the pack here. We started the year off very high for the new listings. They came out with a bit of a bang, but then they rolled over to the downside. Now we're just about above where we were. Come January, we've had a bunch of years that have had, well, maybe 3 or 4 years that have had more new listings to start the year than this year. But this is kind of middle of the pack. I think it'll likely straighten out. And not too much on the new listing speaks to me here.
Yeah, it's interesting because we usually see that rollover, like you said, at this time of year. But I think you're right. I think it's just going to be more of a straightening. I don't think we're going to necessarily see the rollover because I think we have a backlog of people that are wanting to list and just wanted to wait till the tariff talks settled down a little bit before they got out there. And I think that this is going to level off as opposed to truly dip down. I think it'll look more like what we saw here in 2015. Where we're seeing kind of straight across. Who knows if it dips a little bit, but our active listings, again, this is interesting about Georgina is we're not seeing a big sweep up or drastic outpacing in active listings like we've seen in some other areas. So, they're holding pretty well, I would say, in terms of trying to keep a good balance there as opposed to switching very heavily into a buyer's market.
Yeah, and I think we'll see in the next chart when it comes to sales. Sales are significantly down when you look over a 12-year or a 14-year period, but they're not getting outstripped. The active listings are just kind of leveling off here, which is a good sign. But Georgina started the year January, February. Sales volume was in the middle of the mix.
Yes, they're right in the range.
March, we've seen that roll over. We've seen everywhere roll over. Just as people are gauging what's going on down south, what's going on with the federal election, there's a lot of confusion. People are just settling in, but this was a market that wasn't going as bad as the rest of what we've seen. So I do think once everything settles out, this market has the potential to be one of the stronger ones.
Yeah, absolutely. Well said. And so we are seeing like really a reset back to below 2021 pricing here as well. And I think that's why we're starting to see buyers looking there is the adjustment has truly happened in Georgina in terms of the pricing. So buyers are starting to see the value and come back to it now that there's been that reset. Obviously sales volume's still low, but nonetheless, I think that reset in median price is why we're there. And we still have enough data. We have enough sales volume there to show that this is accurate to where we think median price is likely sitting for Georgina.
Yep. Yeah.
Coming into months of inventory again. Look at this. It's not a record high. Not even like at a true peak for where we've been in the last couple of years.
Well, what's different about this chart from a lot of the other charts is this one actually looks like it's rolling over to the downside.
Yeah.
Whereas everything else is making new peaks, lower lows, new peaks. This one's kind of looks like it's peaked out at the end of 2024. Mm-hmm. And now we're starting to potentially maybe roll over a little bit there. We'll see how high the months of inventory ultimately goes, but maybe we're starting to see, just like we did in 2018 where it peaked out and then it was smaller peaks to the downside. Maybe we're hitting that top end of the months of inventory and we're going to start to move our way down.
Yeah, well said. All right, I know that this is a highly requested one that we always come into. Taking a look at Simcoe, we're going to specifically move into the freehold market there. And as we talked about in a few areas, our month-over-month median price, we are seeing just a slight decline there. I mean, you're staying fairly level. It's 781 to 780. That's not bad at all. Our transaction volume, again, maintaining 406 units the prior month. In March, we saw 409. Termination volume, as people are trying to get the pricing in there, it is up 52%. Not as drastic an increase in terms of our year-over-year changes we've seen in some other areas. So I think, like we talked about, same with Georgina, I think a lot of the big corrections happened early, and we're starting to see more of a stabilizing in their market just in general. New listings being up month over month, but down year over year, which is very interesting to see in comparison to where our market was last year. But yeah, Matt, still that adjustment from last year's pricing. We're down 6% year over year.
We're down 6%, but like as we were going through the summer months, we had started to notice that Simcoe was changing. Simcoe's market was different than what we were seeing in York Region. We were seeing a little bit of strength in the Durham region as well, but definitely Simcoe was standing out as there was something in the market changing, and it was noticeable. So at the beginning of the year, yeah, these year over year changes are down 6%. Sales are down 40%. I think as the year goes on, these numbers will decrease quite a bit. Because Simcoe started this year pretty hot, and just like everywhere else, the consumer confidence has fallen off a map. We'll see that in the data, but this is another area I'm excited about because I do think it's turning a corner. I think when the buyers come back to the market, this is going to be the one to keep an eye on.
Yeah, so keep going. Talk to me here about the new listing inventory that we're seeing up there, because again, we're not seeing the record highs, or we're not seeing it outstrip previous years. We're actually sitting at what seems to be one of the lowest years ever for new listings.
Yeah, this is the second lowest year, and we started January, just a little below middle of the pack, and then when we went into February, this was the lowest, I believe, unless there's a faint. I think there's a faint line there. We were tied with one other year for
2014.
So
yeah,
we weren't getting this massive. Yeah, it was in 2014. Yeah. So we weren't getting this mass influx of new listings, but we've started to come up to the high side, which we typically do in Simcoe for March, but still only in the last 14 years, only 1 year has had more new listings in the March market. So that's going to bode well for prices.
Yeah, I'm thinking we might match this 2011 line here and just start to I don't think we're going to roll over. I think we will see more new listings continue to hit the market, but I don't think it's going to do it in such an uptick that we saw maybe here in, what am I looking at there, 2022? Yeah, probably 2022 with that big increase. But I'd expect kind of that leveling off a little bit, still increasing, but leveling off. And when we come into active listings, here's the secret for sellers. You are not in a set buyer's market as much as we're seeing in other regions right now, right? We're right in the middle there in terms of active listings in comparison to the last 14 years.
Yep.
Sales volume. Here's Matt. Here's where we all have to just adjust for a second. We're seeing some positive signs, right? I would say that those are more leading indicators that we were looking at just for a second there. And what we're seeing here is the sales volume that's trailing a little bit, and it's still down. We're looking for more buyers to enter into the market. That will come as we start to get more certainty around what's going on in our current environment with tariffs and whatnot. But again, not a huge drop off like we saw in some other areas where we saw big declines from February to March as everybody put things on hold. But we're seeing a leveling off in that sense, month over month.
We are, and to be fair, we're not rolling over like a lot of other places, which is a great sign. It's holding steady. I think if the tariff talk isn't there, we're above 600, 700 sales. But because that's there, again, this is holding everything steady. This noise will likely pass. People will adjust. New trade partnerships will happen. And people are going to start getting back into the market. And when you have active listings that aren't at all-time highs, new listings that aren't piling onto the market at all-time highs, when buyers come back to the market, there's going to be pent-up demand, and it's going to drive these prices higher. And it might take a little bit longer maybe till June, July, August, we don't know. But this market's set up to excel. Whereas a lot of other markets have so many active listings, even when the buyers come back, it's going to take so much time for that active listings to work its way down and for prices to start accelerating.
Yeah, comparatively, it does look like Simcoe's poised to have a quicker return than other areas when this thing turns around. And you can see it here in terms of median sale price. We have lost a few years there, but we are above the 2021 numbers. So yeah, not bad. And we're, again, just down a little bit from where we were in 2023. So obviously the big adjustment happened from 2024 to now, but not looking bad there in terms of median price, again, in comparison to some other areas that we've been watching.
And you know what, it's good enough that, like I said, if we start to see buyers come back to the market, this price can definitely get above where we saw 2024 and 2023 prices at the end of the year.
Yeah, absolutely. It is poised to be the new high for the area in terms of where it can go. It is not a long jump to get to here, whether it be in April or maybe we do see it lag behind, where we see that in July and August, right? As we start to see, we're going to see another cut coming. Maybe after our election, things calm down as well. We start putting new trade agreements in place, like you said. They could swing around quite quickly. Now, when we're looking at months of inventory, we are still a little bit on the high side. We are at 6 months worth of inventory when we're looking across the board at our freehold homes. I don't know if there's much else to say there, Matt. Like they haven't rolled over in the way that we saw Georgina in terms of necessarily trending downwards. Like we're kind of ping-ponging here in terms of where we might be ending up. What are your thoughts?
Yeah, I think because just the way sales went stale, we're starting to see a build up on the months of inventory. But also in the past, this isn't anything new to Simcoe. They're used to being between the 4 and 6% range. We've had those two different scenarios where interest rates went zero bound and we had a lot of activity and a lot of buyers there. But it's not uncommon to see, their months of inventory float between the 5 and the 7 months. So we're sitting at just below 6. And again, once we start to see some sales pick up, this number is going to roll over pretty nicely.
Yeah, agreed. All right, let's get specific right into Barrie and talking about their freehold market. We've seen a month-over-month increase, in fact. So let's change this one to green while we're here, because they went up 1.3%, as well as their transaction volume going up as well, moving from 121 units to 130. And look at how cool that is that we're updating that stuff on the fly as we record. Termination volume, like we've seen in a lot of other places, increasing. Unlike Simcoe as a whole, it did increase more year over year than it did month over month. And that's people dialing in their prices. And so I'd say here, when I see this, I think that it's working. People are adjusting their pricing. We're starting to see more transactions happen. It's not huge. When we look at our year over year, we're down that 35%. Used to seeing 202 units. Now we're seeing 130. And actually, Matt, I will say, when you look at that 2.7 decrease year over year in median price, again, not bad in comparison to others. We have to remember, when we're looking at this number, you got to think back to the start of 2024, where we actually had a pretty strong little boost in the market there for the first 2.5, 3 months. Yeah,
it was a strong market. So we've seen a lot of other areas where this year over year number has been a lot higher percentage wise. So for it to be at the 2.7% mark, it's holding up quite well compared to some other places, that's for sure.
I think we're poised to see year over year gains in the next couple of months. I think that's what we're going to start seeing happen there in the Barrie market. So talk to me about new listing activity, because I can see here we're not doing bad in terms of new inventory hitting the market.
New listings, only 390 new listings, and typically we're in the 500s to 600 range for new listings. So definitely 200 to 300 new listings down from where we typically are, which is helping ease that pressure that, if we were seeing all-time highs at 8, 9 to 1,000 new freeholds, it would have a massive effect on potentially the price. So the new listings, there's not a huge rush to try and sell a property in that area right now, and that's benefiting the market, I think.
Yeah, absolutely. We see active listings, same thing. We're hovering right around the middle of what we should be. Like Barrie is not looking bad in that sense. Yes, we've seen sales volume down in a lot of areas, but to see this hovering around the middle in terms of active listings, I do think that this will still continue to rise because we should see more new listings coming on the market soon. I would think. I don't know if we're going to necessarily see that rollover that we've seen, like we've talked about. It'll probably move across a little bit, but as sales come, this could decline a little bit. Who knows if it'll happen in May like we've seen in other years, or maybe we see it as early as April. But it's looking pretty good. It's got to happen here, Matt. It's got to happen on the sales volume.
Yeah, it has to, and it's just like everywhere. This is, I don't know if we've looked at one place that's had sales that weren't the lowest they've been since 2011. So this is across the board. This isn't new or typical for just one place. This is
exactly.
Across the board.
This isn't a Barrie issue. This is across the board.
It's a Barrie issue. This is across the board. And one thing we notice here is we came down in February, but we came up, the 1.3% from February to March, which is a good sign. But look how low we are over the last 14 years. And I know for certainty, if we didn't have the low buyer confidence because of what's happening south of the border, because we're in a federal election right now, there's a lot of uncertainty. This number will improve, and the fact that Barrie is not seeing a massive influx of active or new listings, prices will hold up a little bit better in this area than some of the other areas that we've looked at.
Agreed. When we're looking at that median price, again, we're above the 2021 numbers. We're above the 2023 numbers. Like, this is not something we've seen in a lot of pockets. So to see Barrie outperforming in terms of their median price, that's just great for Barrie to see how they're doing it. And like we talked about, we've already seen their adjustments. So their adjustment happened, but again, they're still outpacing those years, right? Yeah. Which a lot of places aren't. So adjustment, whether it happened then or not, there's other municipalities, other regions that got hit harder in terms of the last couple of years.
Yeah.
And that's kind of all there is to it when I see that.
Yeah, and then on the months of inventory, we've seen months of inventory twice before significantly higher in the last couple of years than where we're at now. Most other areas are making new highs over the last
year. Like this.
This is only 3.72. Most areas that we're looking at are around 6%.
Yeah, 5 to 6 months of inventory easily. So for this to be down there at 3.72 very comfortably in a balanced market is it's very positive to see for Barrie.
And if you're wanting to sell a freehold property in Barrie, don't be scared to put it on the market right now.
Yeah.
Prices are holding. Prices are kind of moving to the upside. Once those buyers start coming back to the market, I think there's going to be some pent-up demand, and the properties that are on the market are going to see the benefits of that. Yeah,
exactly. Because what we haven't seen in Barrie has been a massive uptick in new listings. So if you're out there in that sweet spot, there's going to be more demand for your property than when all those other listings start to hit, because we've seen in so many other areas, people have been listing or waiting to list. And right now, Barrie's just been a little stagnant in new listings, which has been great because we're seeing good numbers come from it. But at the same point, we know that they're just around the corner. All right, Simcoe condos. Let's take a look into here and talk about what's going on in Simcoe. So when we see that median price, I think about the Barrie area getting hit in the condo market as well, and Simcoe being the greater whole of that. Month over month decrease to minus 6% basically. Both month over month and year over year. It's interesting to see. I don't think we're that far off in our units, Matt. We're currently sitting at 57 in comparison to 86. It's not great news, but it's not as drastic as some of the other pockets we've been seeing. So I do think that this has been a value issue, specifically when we look in the condo market.
Yeah, unfortunately Simcoe and Barrie are not immune to the issues that are going on in the condo market. Yeah. The freehold market in Simcoe and Barrie is holding up quite well. I think what we're going to see in the data here is that even the condos in Simcoe are struggling a little bit, but definitely not as bad as what we've seen in some of the other areas.
Yeah, and I think part of that, why we're seeing the struggle currently in the condo market there, is we saw a big increase. Sorry, let me get my cursor there. We're seeing a 54% increase in new listing activity, which is higher than what we saw, obviously, in some of the freehold stuff as we came into Barrie and Simcoe in general. So it just makes sense when you've got that influx of new listings. You can see we're almost at a record high with only, I'm trying to pick which year it was here. Was that 2023 outpacing us with 307 units? So,
yeah,
we're sitting at record highs for new listings, Matt, and I think that's why we saw that softening in price.
It was funny because in February it kind of looked like, oh wow, like maybe January had an influx of new listings, and maybe we're going to see this kind of level out a bit and not rip to the high side like we've seen in a lot of other areas, but it has. But at least not having all those properties come on February has lessened a little bit of the blow for how many we would have had over the 3-month period.
Yeah, had they continued the same way. And here's the real issue. And this is a condo market issue across the board. We're sitting record highs in terms of our active listings. And that's the challenge, right? There's so much choice out there for buyers, and that will put downward pressure on pricing. So yeah, we're up there considerably when it comes to active listings. It'll be interesting to see as we carry over to months of inventory. But talk to me first about the sales volume.
Yeah, sales volume, 65 sales. Last year we had 86. 2023 was 133, so we've dropped off quite a bit. 2012, 2013, 2014 were kind of the last times we had sales of this amount. Not as bad as we've seen in a lot of areas. A lot of areas are typically, this is the worst year in since 2011. So that's not too bad. That at least that there is some activity and at least enough activity of condos being purchased here.
I think as well what's important to note is just when the condo market was being built, like when the new construction was coming into occupancy in Barrie, where now we have more units there than we used to have previously as well, right? And so with more units available in Barrie than we had before, like, specifically those earlier years, we do feel more, again, that's where the downward pressure on pricing comes. There's just more units available, and we've got less sales volume to carry for it. And here's where we've seen, like you said, we've seen that roll over.
Yeah, we've seen a rollover. We're down to 2021 prices, and if this keeps up, we're definitely gonna roll below 2021 numbers and hover below those. Yeah.
And here we see, now this is where we're seeing the months of inventory trending upwards. Like, it seems to be leveling off just a little bit in terms of those highs, but still has trended upwards. And by far, I think our biggest number yet at 8.8 months worth of inventory. Tons of choice out there for buyers, considering how little the condo market is selling currently. So again, that speaks to me. There's a lack of urgency there for buyers. They're not worried about that home that they saw and they liked a little bit. They're not worried about it getting scooped up. They're taking their time. They're looking around. They're exploring the market because they have the choice to do so.
They do, and I think it's a prime spot for I still think it's a prime spot for buyers to be looking. If you're okay living in the Simcoe area, in the Barrie area, you've got 8.8 months of inventory on that market. There's deals to be had, and probably deals in great locations as well.
Absolutely. Like, if that's the place you want to be, let's frame it completely different. Say that's where you want to be. You got family nearby. You want to be by the lake, whatever it might be. You don't want to be by the lake in Toronto, so you want to be by the lake up in Barrie. You've got a lot to choose from. And you get the benefit. If we come back to our median price here, you're buying at 2021 pricing, right? It's very rare in the housing market in the GTA and surrounding areas to be able to buy something at prices from 4 years ago, especially with like everything else we've seen going on. So that's a great way to look at it. All right, let's talk about what we're seeing in the rental market, specifically here coming into York Region. Matt, we saw like the median price there when we're looking at what units are renting for. It's been hovering pretty consistently, especially in terms of month over month. We did see some downward pressure in terms of our year over year. And Matt, you've been the one kind of sounding this alarm. We're not bringing as many people in. We had record-breaking years in terms of the amount of people that we brought into the country. We're starting to pull back on that. We're changing some rules in terms of the student housing and our non-permanent residents, and it is showing up in the rent. It is. We actually saw a decline there of something I'd say substantial. You're going from $2,800 a month to $2,700 a month when we look at year over year.
So one of the main factors driving this as well is, when you look at new starts in Canada, 51% of that number is purpose-built rentals. And these are the highest numbers for purpose-built rentals we've seen in a very, very long time hitting the market. Doug Ford changed the laws about how much you can raise rent. Anything that's put on the market after 2018, a lot of this stuff is now flooding the market, and we're starting to see that. And when we get into the other charts, you're really going to see just the amount of inventory and new listings that are starting to hit the market. 33% month over month, 17% year over year. Decent increases. It doesn't seem that much when we're thinking about the increases that we've seen, the transaction volumes.
Yeah.
Even with these great looking transaction volumes, maybe let's head over to the next chart. Your new listings is going off the chart now.
Yeah.
So we're seeing this massive influx of new listings hitting the market.
Yeah, and I think that you and I are going to have a good conversation on one of these shows about the pros and cons of rent control or not having rent control in there, because I think it's got a lot of negative connotation, and I get that 100%. I think there's strong arguments on both sides, but one of the pros that you can see for it is it encouraged specific development in that field. So we're getting more rental units, and as we've seen more rental units come into the market, we've actually seen a decrease in our median price in terms of what rents are going for. So there has probably been some short-term pains as we've been waiting for those things to first get planned, then start to break ground, then to get built, and now come to market. We've been through the pain part, and I think we're going to start to see some of the benefits from it. But again, that requires a much deeper conversation. And like you said, we're seeing high new listings, and I think that's translated into lots of active listings. We're seeing a lot available. So what that means is that prices will go down, and people will be able to rent these for hopefully more affordable prices.
The cure for high prices is high prices. When you get high prices, people want to start flooding the market with those products to capture that. And what ends up happening is you get an oversupply in the market, and that will help regulate rent over a period of time. Now you will at some point start to get to a point where people have been built for a little while, and then rents will start to increase again. But you don't want these massive gyrations of rent increases. And I think a lot of that, yes, it had to do with inflation. People's incomes over the pandemic went up a little bit as well. But one of the big issues was we just hadn't built enough supply, or it was all put on mom and pop's shoulders.
Yep.
Now we're starting to see the purpose-built rentals, the corporations getting back into it, building these units, and I think we will see a nice stability in rents over the next couple of years.
Yeah, and here's how we know that it's working. Our lease volume, our units being leased, is at an all-time high. It is. Yeah. We are not softening prices because there isn't a demand for rental units. It's not that scenario. It's not like the housing market where our prices are softening because there isn't a lot of buyer demand. There is more demand than ever. We are renting more than we've ever rented in the month of March. Yeah. We're going back to 2011 on this chart, but I gotta imagine that it carries through just based on our population numbers.
Yeah.
And even with that demand, we're seeing prices soften. So I think that at a year-over-year basis of $1,000 a month, which I think is.
If you go back one chart too to the active listings, just look at that gap.
Yeah.
And the line below that is 2024. So really, if you go one line more below that, that's 2023. We are
miles.
A massive
$1,000 or 1,000 units.
Yeah.
Sorry.
1,000 units. But a lot of people advertise their properties as well off the MLS, and they do it privately through Facebook and stuff. Those amounts have increased significantly as well too.
Yeah.
And then the private rental companies, the corporations that have built all these new rental units, they have their own websites for that. So these numbers have grown quite a bit, and I think it's a great thing. I think we're going to see a nice stability in prices over the next couple of years, like I said.
Yeah.
So that hopefully people's incomes start to increase and catch up to where those big increases were for rental rates, and hopefully even a little bit of a softening in rent as well.
Yeah, I think this is an important thing for people to know about, because when I look at this, I think a policy decision was made. It may not have been a popular one, but we're seeing some very positive impacts come from it, right? And we've talked about this before, specifically when we're looking at Canada. We need to get more investment coming back into the country, and while it may not feel comfortable in the short term, it does have long-term benefits in terms of how we go about getting there. And so as you can see, a little softening month over month in lease price. That's not the exciting part for me. It was that big year over year adjustment in lease price, because that's what makes the difference. One, it was a much bigger number, right? We're seeing a much bigger change when we look at 2024 down to 2025, and that's what makes the difference for people. And even while we've seen record highs in terms of active listings, we also saw the record highs in leases, and that's why we've seen our months of inventory is actually super low. Don't let the size of the chart fool you. We adjust it so it's all relative. That's only 1.8 months worth of rental inventory. So even with those record highs, we still don't have enough, if you want to argue about it.
Yeah.
In terms of the demand.
But we are moving to the upside now, whereas it seemed for a very long time we were, basically since 2015, we were just in this ever worsening hole of the amount of inventory that we were getting in. So we are starting to see those numbers start to pick up again, and hopefully we can get it back up to 2.5 and above.
Absolutely. All right, let's jump over to Simcoe, where we're talking about what's going on in terms of the rental market. And what we've seen here is kind of holding business as usual in terms of our median sale price, like what the units are renting for. We're hovering around that $2,500 a month. No real change in terms of our year over year. We are seeing more rentals come through in terms of like leases happening. We're up 10%. Days on market. It's a little competitive out there, Matt. And I want to jump right over to our new listing volume and talk to me about where we're sitting here.
Yeah, it's definitely like we discussed before with York Region, where we're seeing a lot more supply on the market. Not so much in Simcoe. Yes, new listings, the third highest year we've seen since 2011 with 500. But we can also see like 2011 to 2017, there wasn't a ton of rentals on the market come March. Something kind of newer as a lot of properties hit the market. A lot of new listings hit the market for the rental side. So we did see the dip to begin the year, which is consistent with a lot of other years. The dip February. Nobody really wants to rent in the cold months, and then we start to see the listings hit the market again. So we did have 500, but it was below the last 2 years had much higher new listings than this year.
Yeah, absolutely. And so when we come into active listings, again, in Simcoe, we're not seeing the highest that we've seen in terms of that inventory, like we saw there in York. Still up there. There's still a lot of units for rent. I think what we might continue to see, if we go back to our page here, I wouldn't be surprised if we start to see a little bit more of a softening in that median price as we try to clear out some of this active listings. Again, we're not as high as we've been in 2 previous years, but it's still much above the norm in terms of what we used to see for active listings. And then when we see this is a good one, Matt. I want you to talk to me about actual lease volume that we're seeing here.
Yeah, so there's clearly a big shift to the amount of rental properties that are listed in the Simcoe area on the MLS. We're seeing that we'll have to start redoing this chart so that it's only between maybe 2020 and above, because really before that these numbers just aren't holding true anymore. But we are unlike York Region, the lease volume is lower than it was the past 2 years. But we are breaking down from, the active listings aren't as high as before. The new listings aren't as high as the last 2 years. So the lease volume is struggling a little bit on that side as well. But I think when we look at the next slide on the median price is actually holding up quite well, all things considered.
Yeah, we're seeing that. And again, months of inventory, we have been trending upwards a little bit there. Like that's where that trend line seems to be going. While we are only at 2 months, so it's not like there's a ton of inventory out there. And when we come back to looking at our lease volume, our demand is at, a third. It's like the third all-time high for what we've seen in terms of actual units getting leased there in comparison to what we saw in obviously all the years prior. So there's a very healthy rental market up this way, and I think that's again why we're seeing such low months of inventory. Like in 2 months there, it's a landlord's market in terms of our months of inventory. All right.